Hello, good morning. Weekly update on FX. This week I'm going to concentrate on the short-term pictures. Already looked at the long-term in a midweek update to a certain extent and explained what was happening on the euro. So we're going to start with the dollar index, and I'm just really just to explain what is going on here. This is a 60-minute chart, and what we have is support and resistance developed by the important swing points on higher time frames, and those time frames go from 120, 240, 360, and then a half day. And the red lines are the half day ones, and so by default are the most important. So just going to sort of explain what happened through the week, so in weeks to come you'll have a better idea when I just click to it and I won't have to go through it in the same level of detail. There's various hieroglyphics on bars as well, which are a variety of divergence-based patterns. And what is important is they have to occur ideally at the most important lines, and those references are the same historically as well. So at the beginning of the week, we had no resistance. We have this level around 96.70. We push higher, and then what happens is eventually price creates resistance based on its own momentum, and the levels move to the top, and we had a series of divergences here. This has got three different ones all on the same bar, so the more that happen at the same point, the more important it is. And it set off a bit of a slide, but that was really to do with what Powell was saying. So from a risk point of view, you were sort of gambling to a certain extent on whether on what he was going to say. We had a knee jerk down pretty quick, but then we stabilised at the what I would call the secondary support point. This was the final line in the sand, as it were. And then into yesterday, had a bit of a rally, but we've never attacked the top of the trend for the week at 97.45. So that's the short-term resistance point, pretty powerful. And we also have an equally powerful support down at 96.54, so there's about a 100-point range, and we've closed pretty much in the middle. On Thursday I talked about how that knee jerk on the dollar was not enough to change anything on the euro, and the fact that the euro was still negative. The move on Powell up to here was directly at a futures-based weekly level. Pretty much stopped there to the tick, went a couple of ticks above it. Couldn't get through it at all, and then late on Friday we've slumped back down. So the thing that happened here was, when you put it into context of how big was the rally, really it didn't even get to the this level here, which is the 360. Didn't even reach 360 resistance, and we actually had the halfway all the way up here at 115. So actually not much of a rally. So then on Friday, what happened was the barrier to what makes price bearish actually changed. So support was down here, then it rose to this area here, and so suddenly it's quite narrow. And on Friday afternoon, as soon as America really opened, we broke that support and closed relatively weak. So the euro is actually still under pressure. All the resistances are above. There's nothing actually below. Let's go to the pound. Pretty choppy all around on the pound, and we've really been trapped in a range that has not changed all week, stayed the same. So the upper boundary is 129.27, the lower boundary is 127.23. So pretty important, I suppose, although it's all things Brexit. If we start trading below 127.23, then it would put price on the defensive again. Remember, that low comes from that knee-jerk Brexit story from a week or so ago, so it is actually quite an important level because it stayed the same for so long. So this dates back to the 16th to the 19th of November, so it's been unchanged since then. So the longer a level is there, the more important it happens to be. Onto the yen. The yen is a little bit of a muddled picture, really. We rallied through the week. We held, let's just scroll this, We held the final support zone on the Sunday night, I think it was, or very late on the previous Friday. We then tried to break up pretty late in the day on the 28th and failed. So this is what happened when we went into Powell again. So it was trying to break up, out comes the story, and it falls. But what we do have is a relatively tight range. So 114.03, 113, was it 113.09, but pretty quiet. Aussie, talked about buying the strongest, selling the weakest. So the pound has been the weakest. Aussie and Kiwi have been the strongest. We're actually trading in the negative early in the week, but we know that the big monthly level, 71.59, had held previously, so we were in no way particularly bearish. It doesn't matter if we're below all the resistances in the short term. If we've got a very, very big monthly level lurking below, we're not interested in selling into that at all. In fact, we're looking to do the opposite. Price then broke up on late on Wednesday on Powell, and we've just basically ebbed sideways since then. But note that the powerful levels are all below price. So we have 72.77 and another level at 72.49, another one at 69. So a really big, powerful zone of support there, and even that level at 72.21 is pretty powerful as well. The resistances are light because they are 120 and 240, green and pink. So still in a positive framework. Kiwi also went to a big weekly level, talked about it previously, sitting at the bottom of the trend, held it in the middle of the night on the 27th, did a bit of a breakout on Powell again, and then since then we've just ambled sideways. But the important thing, big powerful support, which is at 68.02 down to 67.88. Resistances are not overly powerful. Well, actually they are. Notice the red line there. So if we have to start holding value above 68.87, that will give us the next leg up. Dollar CAD. Pretty quiet for dollar CAD. It's buffeted a little bit by oil, I suppose. Resistance pretty strong, 133.60. Line in the sand below 131.86, but not much to report there. Let's do the euro pound because that's been moving around a little bit. Talked previously about how it cannot sustain breaks out of that defined range on the historical basis. So as is normal for the course, we had a false break. We've then rallied up towards the top of the trend. Didn't quite get to the perfect point at 89.34, and then we slumped. So we're trapped between 89.34, 88.10, bang smack in the middle. Finally, we'll just do the pound Aussie and the pound Kiwi, because the idea there is, of course, you sell the weakest, buy the strongest, and that means it's pound against Aussie and pound against Kiwi. And so while not a huge amount probably happening on the outrights, when you look at the cross rate, it's just been a steady drift the whole week really. Had a bit of a breakdown on Powell, a bit of a bounce, and then it slumped again. Resistances are all above, only a 240 is below, so no reason to change that. You have your monthly level, remember, I've talked about in other videos, which is your downside target, which is about another 150 to 200 away. This is pound Kiwi. Key moment really at the beginning of the week was how it stopped directly at the final resistance, ebbed and flowed, and then gradually starts drifting. And this is the, I suppose, the weakest cross, pound against Kiwi, and there is no support at the moment, and your downside target is a very, very long way away. We don't really want to see it holding above 186.90, because if it's going to break down, it should just carry on. Okay, we'll leave it at that. Thanks very much.